How's it going, everybody? This is going to be another video on our volume profile shapes and the typical trade setups you can look for with those certain trading shapes. Our first video was on the D-shape profile. If you guys haven't seen that, I will link that in the description below. You don't have to watch that video before this one, but if you would like to, go ahead and click off and check that one out. In this video, we're going to be talking about the P-shape profile and the lowercase b-shape profile, which are known as imbalanced days. The D-shape bell curve profile is known as a balanced profile, and if you have value hovering towards the high or hovering towards the low of that profile, then they would be seen as imbalanced. Now, this is a very extensive write-up that I put on Substack. If you guys would like to follow along and read through this entire write-up, I will have this in the description below. I will not be covering every single little detail in this video, but I will be covering the main points. Before we get started, if you guys enjoyed this content, make sure to hit that subscribe button. Be sure to like the video, and let's go ahead and start off with the P-shape profile. So what you need to know about a P-shape profile is a P-shape profile is one that has a major node towards the high of day, then the remaining volume is spread very thin below the POC node at the top. This creates a long tail at the middle and low of day with the POC and value area towards the high of the day. These days are known as short coverings and typically lead to continuation and strong breakouts on the following days. They are inherently bullish. A typical trade would be longing once the price holds above the POC and targeting previous value levels above. Also, a typical trade would be longing a break and hold above the POC of the P-shape and targeting previous value levels. We're going to talk about how you can use the P-shape profile bullishly and also how you can use a P-shape profile bearishly. I actually prefer to use these bearishly because I am a reversal trader, even though most of the time they do like to break out to the upside. All right, let's go ahead and get started with the first example here. So this is a prime example of what a P-shape profile would look like. It has that POC towards the high of day. It has very little upper tail, and it has an extremely long lower tail. As I said in the first video of this series, I'm not going to be covering the exact details of how to trade volume profile in this video. I kind of expect you guys to know that already. If you don't, I will link the How to Trade Volume Profile series down below. You'll also see a little pop-up on your screen here. If you're too confused, go ahead and check that out and come back to this video. But okay, so we have the POC towards the high. We have very little upper tail, a very long lower tail, and the volume is very weak towards the low. That is a perfect example of a P-shaped profile. Now, what we want to look for, how do we trade these P-shaped profiles? So if the P-shaped profile is closed, let's say it's the prior day, and now we are trading the following day, like in this example here, the P-shaped profile closed, you had a lot of bullish momentum, and you closed with a strong node on the high there, but we did not have any upper tail. So how do we trade this? So normally on that following day, there are two ways we can trade that P-shape. We want to see either a retest of that value area low, which does not happen in this example, or we want to see value starting to build above that P-shape's POC node. So in this case, we have the POC node towards the high, and we start to build this very strong bullish momentum above that POC node. That would be a nice entry with your stop loss below any major support node that is below that entry price. So in this case, we have the current day's POC. We put our stop loss below that, and then we target any previous value levels. So in this case, we had value from this day back here. We had a value area high that we could target, and then you could see that that value area high was tested right there. Here's another example. We had the P-shape profile closing here. We had the POC node being tested. You had a little bit of bearish momentum off of that P-shape high. So one thing we can do here is we can look at a Fibonacci. If we want to grab a Fibonacci from the P-shape low of day to the P-shape high of day, if we start to see a break of that P-shape's high, so in this case, you can see the high of day right here. If we start to see a break of that P-shaped high, we can take a long. Now, where we use the Fibonacci in this case is if we do not have any prior value levels to target. This is a good example on what you could use in today's market because we are hitting all-time highs. If we do not have any prior value levels, then we can look for these Fibonacci extensions as our targets. So as we break that P-shaped high, we can look for these Fibonacci levels for our targets. In this case, the 50% and the 61.8% extension levels would be a great target for that breakout. And then our stop loss would be below that POC node. Now, this would be more of a swing trade, obviously, because this trade does take a few days to play out. This would not be for a scalp. But in this case, our stop loss was not tested, and we were able to hit the targets fairly easily. Now, if you don't know how to trade Fibonacci, I will also link that in the description below. If there's any concepts that I talk about in these videos, I most likely have a video that covers that concept. Okay, now getting to the way that I like to trade P-shaped profiles, that's known as a P-shaped profile failing or being squeezed. Okay, so what we know about a P-shaped profile is it's typically bullish leaning. It's not 100% bullish because it's known as a shorts covering rally. What that means is you have typically a downtrend that is ending, and you're starting to see those shorts close their positions, and that's where that bullish momentum is coming from. It's not coming from just the buy side being extremely bullish. It's more so the sell side just getting a little scared or taking profit. Okay, so in this case, we had a downtrend of momentum. Then we started to lose that momentum, and the buyers started to come in, which created that P-shaped profile. So we have that buy pressure towards the high there with very little value being found on the lows. Now, what a P-shaped profile being trapped and failing looks like is basically when we begin to fail that POC node or begin to fail that value area low of that POC day, then think about all those buyers. Think about all that volume that was on that high of day that is now in danger of being squeezed out of their positions. So once that POC node, you can see on this following day here, once that POC node begins to act as resistance, that is typically a good place to go ahead and take a short and then place your stop loss above that POC node, preferably above the high of day if it's not too far. And then you want to target that loss of value in that lower tail. So once we lose that value real low, you want to target preferably that low of day if possible. But realistically, you just really look for that bearish momentum. Where that bearish momentum begins to fail and starts to bounce, you want to go ahead and get out of that trade. You can use any trailing indicators you like to leave runners on. Maybe they're EMAs, maybe they're our OTG trading bots, whether that be Delta, whatever it may be. But typically you want to use trailing indicators to help you follow that trend as low as possible, preferably looking for that low of day on that P-shaped profile. Okay, so once again, the P-shaped profile closes. Once that POC node begins to act as resistance or that value area low is completely lost, typically the sell pressure will ramp up, going all the way back to that low of day. So in this example right here, we can see the POC node was lost. We would take our short right when that node begins to fail, stop loss above the node or preferably above the high of day, targeting the value area low if you want a very quick exit, targeting previous value levels, preferably targeting that low of day, which in this example, we did not get. Another great target that I did not show in that example is VWAP. Typically, if I go back here, typically VWAP will be kind of trailing. So if you look at that prior day's VWAP, it might be kind of in that general area, about the halfway point of the tail. You can target that as well. Okay, another thing we want to look at here is when the P shape is failing to find value on that upper portion of the node. So when we see the P shape beginning to form, and we start to look for that possible higher value breakout, we want to go back to what we talked about in the first video. The two things we always look for when you are breaking out of the value area. We look for building value, which is building those nodes outside of the value area. Then we look for that value to be protected. Okay. What do I mean by protected? We covered this a little bit in the first video, but I'll cover it again. It means when that node is established, are the prices using it as support? So in this case, let's say we began to build this node. We started to push up into 51.25, and then we came back down to test that 51.20, 51.15 node. If it was being protected, they would not allow price to go below that node for very long, if at all. So if price began to push to 15, it should bounce immediately. If it began to push down to 20, it should bounce immediately. So as they begin to protect that node, the buy pressure comes in, they want higher prices, okay? If they do not do that, if they build that node but continue to sell that node, which in this example, that's exactly what they did, then most likely that P shape is beginning to fail. My favorite way to trade that is, they're both in the playbook series. If you guys watch my playbook series, it's the first video in the playbook, the bearish divergence, which is also kind of similar to our rollover top pattern. And the other one is the bearish sweep. I talk about how to trade sweeps. So when we begin to sweep that value area high or wherever that node is, bearishly, we want to go ahead and take that short. We want to target the value area low for a very quick target. Or if you want to hold on longer, you want to look for the low of day or the overnight low if that is lower as well. So in this case here, we can see the overnight low, which was right here, was hit fairly easily. So once that value area low was lost, if you did not get the sweeping trade, you can take it when it begins to show a lot of bearish momentum into that value area low. We begin to lose that value area low as support. So typically, if you think about a P-shaped profile, the most optimal buy point for those buyers is that value area low, because they want to protect that low and then rotate it back to that value area high and possibly look for higher prices even outside of the value area high. So if we're trading that as a bearish move, when we begin to see prices breaking the value area low and then using it as resistance, that is a signal that that P shape is most likely failing, and then we can possibly look for that squeeze to the downside. Okay. All right, another concept that we can use with the P-shaped profiles is known as a tail imbalance. So what we look for on a P-shaped profile, if it's very bullish, it will have a long lower tail and basically no upper tail. So let's say we did not have any previous value levels that we could target, and we needed something to target for our breakout trade. What we can do is we can measure that lower tail. In this example, it's around 28 points. We can take that same measurement from the value area high. So how to measure the lower tail, let me cover that really quickly. You take the value area low to the low of day. That is the lower tail. And in this case, the value area high to the high of day would be the upper tail. We do not have an upper tail. The value area high is the high of day. Okay, so we take that same measurement, the value area low to low of day, in this case it's 28.5 points. We draw that out from the value area high, and that is what our upper tail should be if we were to extend that tail. So therefore we can say, if I wanted to take this as a breakout trade, if price began to hold above that value area high and we began to use that as support, as seen in this example right here, you can see that value begins to build up above that value area high. It took 2 days. You can see in this day right here, it failed to do that. But in this day right here, you did build that value above that value area high. Then we can look for that tail imbalance as a target. Okay? So now price is looking for higher prices, and they begin to extend that upper tail. Here's an example on how you could have traded that. So price began to break out of that value area high. You can take that as a long. you can put your stop loss below that prior node, whatever that support node is, and then target that imbalance. Okay, so that is it for the P-shaped profile. Now let's take a look at the lowercase b. Now the lowercase b is pretty much identical to the P-shaped profile, just flip it upside down. Okay, so with the lowercase b, it is typically seen with that POC towards the low of day. It has a very little to no lower tail with a long upper tail. Volume should fall off towards the high, but it should have more volume towards the low, becoming a bottom-heavy profile. Now, with lowercase b profiles, they are not seen as overly bearish. They are just seen as longs closing their positions. The buyers are getting a little scared. Maybe they're taking profit. Maybe it's hitting a major resistance level, something along those lines. You're not extremely bearish if you see a lowercase b, but it means that the buyers are beginning to exit their positions. So in this example here, we can see the prior day had a pretty bullish move. Those buyers got trapped, and then they got a little scared, so they began to sell their positions, which created a lowercase b. And then for the following day, we can say that if that POC node was being protected bearishly, then we could take that as a short. Stop loss could be above any prior nodes that were acting as resistance, or if you wanted to use the candlesticks, you could do that as well. And then we want to go ahead and target previous value levels if possible. If it's not possible, then once again, we can use that same tail extension technique, which I believe I have examples of later in the write-up. So this would be a B-shaped profile closing bullishly. So how the P-shaped profile can be trapped, and you can look at the P-shaped profile bearishly, you can do the same thing with a lowercase b. The lowercase b can also be seen as a bullish profile. So if we think about what's happening with a lowercase b has a lot of bottom-heavy value, a lot of value that's hovering towards the low of that day. So what we know about that is if we begin to push higher, then those prices, or sorry, those sellers, those traders that are towards that low of day, they are going to begin to get scared if price is beginning to push up. And if it breaks that value area high, they are going to start getting very scared because now they are basically selling the low of day. So they are therefore getting trapped. So if you have a end of day rally and you begin to close towards the high of that profile, then what you want to look for on the following day is you want to look for that cluster of volume that was on that lowercase b to act as support. So before you were looking for it to act as resistance, but because we closed so strong, those traders that were selling the low, they might be trapped now. So as price begins to come down to try to protect them, look for a bounce. If they are not able to close back below that POC or back below that value low, then most likely those traders are trapped, and the buyers are going to start looking for higher prices to squeeze them out. Okay, so in this example here, we could have taken a long stop loss below the prior node, and then we could have targeted previous value levels. So in this example here, depending on where you entered it, you could have been stopped out. I wanted to show this in this example as if you took the first retest of that value area high, you see the value area high right here. If you took that first retest, you just barely would have not hit your targets, and then you would have gotten stopped out. If you would have taken the POC node, you damn near had a perfect entry, and you would have hit those prior value levels for your targets. So it depends really where that buy pressure begins to come in. You can either look for that value area high, or you can look for that POC. Oh, sorry, I lost my place. Give me 1 second here to catch up. So here's the example of how you could have traded that as a POC trade. So this would have been the value area high trade, which would have been stopped out. And that would have been the POC trade. Okay, so here is how you can take the tail extension off of the lowercase b. So here's a lowercase b day. We see that there's little to no lower tail. We have a very large upper tail. So we can draw our measurement from the value area high to the high of day, which in this example is about 49 points. Then we can take that from the value area low downward for another 49 points. And that would be our target for an imbalanced trade. Okay. So right here, you could have taken that short once that sell pressure began to ramp below that POC. Stop loss, which is right here on the green arrow. And then the stop loss would have been above the prior volume node or prior candlesticks, whichever one you prefer. And then we want to target that imbalance. Okay, so we began to lose that value area low right here where the arrow is. Stop loss above the prior node, targeting the imbalance. But all right, guys, that is it for this video. If you guys want to learn more, go ahead and take a look at this very long write-up that I put on Substack. I will put that in the description below. We also have one more that we'll have on this series, most likely coming out next week. If you guys enjoyed this video, hit that subscribe button. Be sure to like the video. If you guys want to learn more about volume profile, be sure to check out my volume profile playlist on YouTube, and also the order flow playlist on YouTube as well. I'll see you guys in the next one. Peace out, everybody.